My name is Karan Kishorepuria. I just finished up my presidency with NUimpact, which is Northeastern University's uh, student-led impact investing fund. So this is the brief agenda for today's presentation. So we'll be going up with the history of NUimpact. We'll talk a little bit about what NUimpact is, what they do. We'll talk about our strongest point of our entire organization, our team. Then we'll go into detail about what we did this past year, and then the major part of the presentation will deal with the first investment that we've ever made, and we're super excited to see that through. And yeah, so brief history is NUimpact was started in 2015 by two female founders, Ruby Khan and Mindy Chen, who were taking an impact investing class taught at Northeastern. So they had this cool idea of starting Northeastern's own impact investing fund, and they applied for a small grant to Thrive, which is Northeastern's Center for Financial Independence, which kind of promotes financial literacy on campus through student-run programs, and got some small funding from them. In 2016 to 2018, a big portion of the time was spent on doing educational programming, seeing if other students at Northeastern were actually interested in something like an impact investing fund, and then moving from there to see if we can build something concrete of what student interest has been. So in fall 2018, we had our first founding analyst team, and that's where I joined NUimpact. And we were a group of like 8-10 people who used to meet bi-weekly and brainstorm as to what our fund would look like, what kind of investment thesis do we want. Do we want to do microfinance? Do we want to do ESG? Do we want to do index-based investing? And we sort of came about with NUimpact, which invests money with a triple bottom line approach in private markets in our own community. So Northeastern is based in this community called Roxbury, which historically has been a community with a lot of people who come from various backgrounds and might not have access to capital like I might have with a Northeastern education. And we sort of based our thesis on that. Moving on was in 2018, we finalized our investment process, our thesis, and got recognized as an official entity by Mosaic, which is Northeastern's entrepreneurship ecosystem. Now, summer 2019 is when we started to see real growth in our initiative, when our team grew from 19 to 43 members, and we received more applicants to our team than Northeastern's student-led fund, which invests in the public equity markets and which had existed on campus for, I think, the last 10, 15 years. So it was really interesting to see so much student interest in our triple bottom line mission. Moving on from there, we still didn't have the full get-go from the university who wanted us to check out a few legal boxes before we could do what we wanted to do. And we drafted our fund operating rules with the help of a legal fellow at Northeastern. And in fall 2019, we got approval for these guidelines from our dean of the business school and from Northeastern's general counsel, Northeastern's law department. In 2019, we also hosted an annual summit. We went from start to completion of our entire process in fall 2019. And in fall 2019, towards the end, we had our first investment committee meeting. And in spring, our first investment was approved. We negotiated the terms for the investment and signed contracts. And we still continue to function while COVID-19 has taken place, which is pretty unfortunate, but we still keep our mission going and we don't want to lose momentum. So what's NUimpact's mission? So NUimpact's mission is two-pronged. So we try to raise awareness about sustainable investing across various range of asset classes on the Northeastern campus and the Boston venture ecosystem. And we also give students the chance to take part in an experiential learning model by being an analyst or a student leader in the fund. And we also, like Northeastern has a co-op program wherein students can work for 6 months with a big organization or a small organization. And we build co-ops in the sustainable investing place through our partnerships that we have. So we've built co-ops with the likes of Prime Impact Fund, which is a venture capital fund based in Boston, Wellington Management, Grameen Bank, and a few others. And that really helps us catapult people who can have careers in sustainable investing and make a real difference to the world today. So this is our beautiful team. So this is our programming team, which hosts events, workshops, and all that good stuff to educate students about what impact investing is. And this is our fund team, which as you can see is pretty big. So we divide our fund up into senior analysts, junior analysts, and research analysts. And we invest across 5 sectors. So we have 5 senior analysts representing each of those sectors. Each sector has 1 senior analyst, 3 or 4 junior analysts, 1 research analyst, which is sort of the industry expert, probably studying that industry in school. And because in a student-led fund, continuity is a big problem, we have this program called Rotational Associates, which is typically reserved for first-year students. And we rotate them, as the name suggests, every 4 weeks across different areas of the organization to give them a broad overview of what the club looks like, and they can grow on to be future leadership within NUimpact and keep that institutional knowledge within the team. Now, because we're student-led and student-formed, one big part of it is making sure that we have strong mentors and advisors, and that's where our amazing advisory board comes in. We divide our advisory board up into a couple buckets. So we have our alumni advisors who sort of provide institutional knowledge since they've been there for a while. We have university representatives who have different areas of expertise. For example, one person might be in the VC community, one person might be an angel, one person might be raising money for his own startup, and they help us with all the industry knowledge. Our industry representatives represent different parts that we need help with. So, for example, Carl Wallenstein is our legal help. He's a partner in Morgan Lewis. Ben Bungert is our EdTech guru, works for LearnLaunch, really big EdTech affiliate in Boston. Anika Morgan represents the food and ag space. Sarah Menard, a founding faculty member, provides the impact investing theory. So we have a pretty diverse and well-rounded advisory board, which provides us mentorship whenever we need it. And we hop on monthly calls with all those different buckets that I spoke about earlier. So now speaking about what happened last year. So last year, apart from making our first investment, we did a lot of educational programming. So we had 17 educational events. A lot of these were hosted in collaborations with other clubs across campus. Since impact investing is a niche, we collaborate with other clubs on campus like the Women in Business Club or the Deep Tech Club to get their members educated about what impact investing is and the power it has. We also held 10 technical workshops with industry professionals talking about topics like sourcing, prospecting, diligence, term sheet writing, etc. Our annual summit, which happened for the first time this past November, known as NUSIS or Northeastern University Sustainable Investing Summit, saw 120 attendees, 12 plus schools from the East Coast, including people from Brown, BU, Tufts, etc., and 26 high-level speakers. Our fund is broken down into 5 sectors this past year. We've had 2 IC or investment committee meetings where 8 investment review memorandums were pitched, which are basically detailed documents about companies our analysts have sourced, and 1 investment was approved. Now, talking a little bit about our investment thesis. So we have a 3-pronged approach. We try to invest only in Boston or Massachusetts-based organizations. The organizations we're investing in have to be for-profit, sustainable businesses with an impact-first mission. So we are ready to forego financial returns to make sure that we meet that impact criterion that we strongly desire. And our third, which is pretty unique, part of our thesis is that the venture that we're investing either has to be founded by a member of the underserved community or has to serve a market of the underserved community. And by underserved community, I'm talking about people who might not have access to capital like you or I might have, talking about founders of color, immigrant founders, single moms, etc. Talking about, this is our investment process. We have a 5-step process, which starts from prospecting and sourcing companies, so reaching out initially, doing some diligence or getting on a phone call, doing some deep diligence, making an investment pitch to our investment committee, which happens at the end of the semester. And finally, once an investment is approved, we take part in portfolio management with an educational consulting agreement wherein we lock in with the company for 3 years after we make an investment to help them with certain aspects of their business that they might need help with. And students get a chance to really engage with the startup and learn the best practices about the same. So I think one really unique part about NUimpact is that we are strongly student-led, and we do that. We say that from start to finish. So even our final investment decision is student-led, wherein 3 out of the 5 voting members on our investment committee are students. So the president, director of fund ops, director of investments, and then we have a faculty advisor and one elected alumni representative. The other people in the room sort of give us their advice and guidance, but at the end of the day, the main brunt of the decision is taken by the students because they've selected the companies and done all the work. However, you need a 4/5 majority for the investment to go through. Now, one really interesting and probably the most challenging part for any student-led fund is fundraising, and some of you might have questions about that. So NUimpact is historically fundraised in 4 big buckets. So number one is grants. So we've applied for grants with Thrive, which I spoke about earlier. We've applied for grants with Mosaic, which is Northeastern's entrepreneurship ecosystem, which promotes entrepreneurship on campus and is a network of 12 organizations. And then we got another Thrive grant, which allows us to go for conferences like we went for the one at Yale, where I actually met Nicole, and a few other conferences that we go for around Boston and beyond. We also work with university advancement. So like, officers in Northeastern or faculty who are raising money from the more established alumni, we work with them to make sure we can get some donations into our fund. And one really big thing that's helped us a lot is Northeastern is a big school. So we have 6 or 7 schools within Northeastern, so the business school, the health sciences school, etc. So we work with the individual schools' advancement as well to tap into their alumni pool and see if there's any intersection between alumni and our mission. And that's really helped us get a big portion of our funding going. And because we're a pretty diverse team, which represents all schools on campus, not just the business school, and 50% or more women on our fund, that sort of helps to get fundraising from those platforms. This past year, we also had our summit, and we raised some money through corporate sponsorships, ticket sales, and sponsorship from Northeastern-based organizations. And then some other sources that we're tackling right now as we speak is we're asking the Center of Student Involvement, which takes a part of the Northeastern Students Tuition, to give us some money. We are fundraising through Northeastern, through NUimpact alumni, and we're also doing some video campaigning and all that good stuff that innovative students come up with. So talking about our investment funnel, this past year, so from fall 2019 to spring 2020, we operate in a semesterly model because we're student-led. We sourced 290 companies. We had 80 plus companies that we engaged with over a phone call or an in-person meeting. 8 IRMs represented, or like detailed 30-page reviews of the company to the investment committee, and 1 investment was approved. Now, I think Nicole asked me to touch on our first investment. I'll walk you through what our first investment looked like and how we decided to choose our first investment. So 4 companies were pitched at our first IC meeting. Post that meeting, we sent a Google form to all the attendees of the meeting to sort of get a democratic vote on what they felt were the top 2 companies. Our team is pretty unanimous that they chose the same 2 companies mostly, and we did further diligence on both those companies in December. In January, 1 company was approved with a formal vote from the investment committee. In February, the terms of the deal were finalized. I'll talk about the terms in my next slide. And then in March 20, we sort of enacted the educational consulting agreement. And in May 20, which is right now, we have just finished signing up the contracts. And we had our second investment committee meeting and are hoping to move forward with our second investment as well. So our first investment was actually made in a company called EatWell. It's an amazing company. Do check it out at their website out here in case you're interested to learn more. It's based out of Boston. It's in the food and ag sector. And the mission of EatWell is pretty simple. It tries to provide low-cost, nutritious meal kits in food desert areas or areas where they might not have access to a grocery store or nutritious low-cost meal kits. They use community partnerships with the Boys and Girls Club, YMCAs, etc., to distribute and sell their meal kits. And the investment vehicle we chose to invest in EatWell with is called a SAFE. A SAFE stands for the Simple Agreement of Future Equity. For those of you who might not know, and I wasn't familiar with this 2 years ago, a SAFE is very similar to a convertible note. with a lot less restrictions and much more founder friendly. It requires a lot less legal framework, it's a lot less binding. It's really popular on the West Coast and was actually started by Y Combinator, which is a really big accelerator based out of the West Coast. And that's the investment vehicle we chose to invest our small ticket size with. A few reasons why we chose EatWell. They are an amazing team, a very diverse team. The main founders actually from Harvard, they did the MBA there. They also have a Michigan star chef. They have a couple of strong community partnerships, and we've heard nothing but amazing things about them. They have an impact first mission where they're trying to help the community first, and that came about with our impact measurement stuff. And I'm happy to dive more deeper into that if anybody's interested. They've also seen fantastic traction in recent times with being accepted into the FinTech cohort and Mass Challenge, doing studies with Boston and Harvard University to validate their investment process, their entire thesis of the company. And most recently, they got a lot of money to do a pilot run with Brigham and Women's Hospital. Uh, and I think one of the most important points is EatWell was always responsive and willing to work with students. They believed in our mission and we believed in theirs. So there was a fit both ways. And the educational consulting experience was just like a cherry on the top of the cake. So that's a little bit about our first investment. That's a beautiful team picture right out here. If you have any questions beyond the presentation or would like to connect later, you can email me or connect on LinkedIn. And you can check out NUimpact on our website or follow us on social media. And I'll open up to questions now. I think we still have some time left. So if anyone has any questions, don't feel shy. Happy to answer anything at all.
Hi, Karan. This is Adwa. Congratulations. This is a wonderful presentation. And I know having met last fall at SRI, how hard you've been working on this. So congratulations on the first investment being completed. I'm interested in maybe what the most rewarding aspect of this was and maybe the most challenging aspect, starting this with the first investment and sort of needing to pioneer it at your institution.
For sure. Adwa, great to hear from you. Like, I think we're speaking after 6 months, so pleasure hearing from you again.
Yeah.
The most challenging thing by far has been fundraising and dealing with the bureaucracy of a university model. Like, like a university is pretty risk averse, and people have tried starting a private investment club where you write small ticket sizes and invest privately. It's not the triple bottom line approach, but more like a venture capital approach. And that didn't take place. And initially 2 years ago, when we were talking to the CFO of our school, the president of our university, like some big people in the university ecosystem, they all told us it's a great idea, we love your mission, but it's not going to happen. There are too many risks. And we told them that, tell us what you want to be done and we'll find a way to do it. So they wanted us to get a lawyer. We got a lawyer on board. They wanted us to get the first check. We got the first check on board. And just making sure that whatever they come back with, we check off that box. And after a lot of banging on the door opened up magically. That's been the most challenging experience in terms of, I think it's seeing the organization what it has. So it started off with 3-4 people working together on this triple bottom line approach. And today, we're one of the most popular organizations on campus. We receive hundreds of applicants every semester for students trying to be a part of the team. We're extremely diverse, as you can see in this picture. We represent, I think, 12 or 13 countries. So seeing this community grow as far as it has grown and continues to grow is perhaps the most rewarding experience that I've had being this organization.
Thank you, Karan. And I'm wondering too, with that overview of the really detailed and well thought out process for the investment thesis and process itself, how as a group you all came up with that process and how long it took, and if there were any resources related to the investment thesis and the process, but also just generally that you might recommend to other students that are going through this as well?
So yeah, for sure. So I think our investment thesis and our process is ever evolving. So every semester we try, or every couple of weeks we try and add something new. Uh, and an example of that is that most recently we added a community and director of impact role to engage more so with the community and make sure we're growing with them and actually understand what it's like to be a part of the community we're investing in. A couple of resources that really helped us was actually hopping on calls of the SIILK network. So hopping on calls. I think I've heard the NYU group pitch before. I think the Arizona group pitch before. So hearing other investment funds pitch and being able to connect with them, learn more about their best practices has been super helpful. Uh, Also, not being afraid to reach out to these people. So whenever I hear something interesting, I'll shoot them an email. The maximum the thing that might happen is that I won't get a response back, and that's totally fine. Uh, Taking advantage of all the different advisory board members we have as an organization. So we have different, I'm sure every school has some alumni working in sustainable investing, and just tapping into that network and using them as guides and mentors really helped us. And then of course, doing diligence, making sure you're doing it for the right reasons, and continue educating yourself. And those are something that really helped us. Apart from going for events like the SRI conference, the summit at Yale, the Brown summit that happened this past year, those things also really helped us learn more about this entire ecosystem of sustainable investing and impact investing.
Great, thank you. Other questions?
I have a question. This is Alice. Karan, this was amazing, just amazing process to watch unfold and all the work you've done and smart decisions you've made. I had a question about two questions, I guess, is how much money, if you don't mind saying, did you manage to fundraise? It sounds like it's been a challenge. And then I had a question about the SAFE. If you could describe a little more about how SAFE works in terms of your capital going in and what you get back.
Yeah, for sure. So great questions. So Alice, I think till to date we have raised about $50,000, which includes the grants, the fundraising from other sides, and the money we raised for our first summit. $25,000 of that was towards our first investment. So the rest of it was more towards programming efforts. So we raised about $25,000 to $30,000 for our investment and decided to invest $25,000 in EatWell in a SAFE agreement. So if that answers the first part, I'll move on to the second part. The second part, SAFE is like a convertible note. So for those of you who might not know, when you're investing in really early stage companies, which might be pre-revenue or just starting to make money, it's really hard to value them. So you sort of invest the money right now, get a small interest rate on that money, and then your money converts into shares when the company raises some more money in future rounds. So the company we invested in, EatWell, is really early stage. We are an impact first fund. So the interest wasn't the most important part for our fund and our mission. We believe that EatWell will pay us back and some more. And the SAFE agreement sort of worked well. It's more founder friendly in the sense that a SAFE does not tie the company to a timeline, so they don't have to convert our principal payment into shares in a specific time period. They can do it whenever they raise money. So if they raise money after 5 years, our money converts after 5 years instead of a convertible note wherein our money will convert at a specific time. The interest rate is also much more relaxed. So it is either not there or it's much more relaxed. So it's much easier to do. The documentation from a legal perspective is much lesser. So a SAFE agreement typically has 5 pages, and we actually modeled our SAFE term sheet from Y Combinator's term sheet. So they have a SAFE agreement on their website, and it's very similar to that. And we work with our legal fellow and our angel investor to make sure it's well worked out. And then just like the broad overview of the terms that I'm allowed to discuss, because the company is asked not to disclose everything that we do with them, is that we have a $3 million cap with a 80% discount rate on our initial investment. So when we invest, once the company raises more money, we get a slight discount as beneficiaries of investing with more risk right now. I hope that answers your question, Alice, and happy to answer any further follow-ups that you might have.
Well, that was a great answer. Thank you.
Hi, Karan. This is Catherine. We met at SRI. Really great to see you again, and congratulations. I wanted to follow up on Alice's question and just get a little bit more information about, or like context around the deal. Were there other investors involved? Did NU end up leading this? And then I guess a second question is more, how can you leverage some of the structures and processes you've built this year? Like in the future, do you anticipate investing via safes and going through sort of the same due diligence funnel that you did this last year?
For sure. I think, firstly, Catherine, really nice to see you after a long while as well. Answering some of those questions. So we weren't going into any of our investments or talking to any of our companies. We prefer not to lead any rounds because we don't have the expertise to lead a round, and our ticket size, which is, we say between $10,000 and $40,000 is what we want to invest, is too small for us to be the leaders of a round. However, with EatWell, they were, I would say, on a spectrum, they were on the earlier side, and we were sort of the first kind of capital coming in. So EatWell was a part of a venture accelerator called Bond Below Venture Accelerator based out of Boston. So they had raised some money through that accelerator. They were trying to raise 150 grand in the round that we were investing in. We were the first kind of soft commitment that they had. So prior to us, they had no commitment. So our criterion before we said that we'll sign on the dotted line was that you have to raise or have commitments for at least half of your entire round. So once you get $75,000 in soft commitment, we are fully sure that we will sign. We will be the first to write you a check. And they got that 75 grand, I believe, in 2 or 3 investments. One came from Bond Below itself. One came from an angel investor, and one came from their Harvard network. And I believe those checks have come in now, but we were sort of the first hard commitment saying that, yes, we will go through with that now that you've raised more money. And they're actually looking to raise more money in the near future with some more testing that they're doing. And they've also received 100 grand right now for their pilot run with the hospital that I spoke about earlier. Answering your second question in terms of the processes and structures. So we are pretty if anybody wants anything in terms of help or guidance or sharing best practices, we're more than happy to share anything that we have built out in the past 1 or 2 years. In terms of investment vehicle, we are pretty flexible in terms of investment vehicle. We're student-led model, so we can invest with equity, convertible debt, convertible note. And we also have a flagship vehicle called the income share agreement, which is actually one person I spoke about earlier, Karthik Krishnan, who is on our advisory board right out here. He runs this company called MentorWorks, which sort of specializes in that investment vehicle. We've never used it. We're a little scared to use it, but he understands that pretty well, and he guides us through in case a company is looking to do that. So in our second investment committee meeting, we saw companies that are looking for straight up debt, convertible note, no safes this time, but we're pretty flexible and open doing investing across a plethora of investment vehicles as long as it's a fit both ways. Great questions.
All right. Any other questions from the group?
Hi, yeah, I just have a quick question. This is Elise from Bentley Sustainable Investing Group. I know you just briefly mentioned the rotational associates, for first-year students, I believe. I was just wondering if you could just talk a little bit more about that, because I think that is definitely something that we could use. We're always trying to find ways to get freshmen more involved. So you just a short description would help. Thank you.
For sure. Great question, Elise. So I think, So like, when we were fundraising, we've been fundraising for a while. It's not easy, but a couple of years ago when we were fundraising, people would often ask us, or these high net worth individuals would ask us, your students, what happens when you graduate? How do you make sure you have that continuity in your model? And we researched and found out that a rotation associate program might work well. So most of our students on our team are typically second or third years who've either done a co-op in some kind of finance or some field that they can bring expertise of, or they have a strong passion in this space by leading an NGO, being part of some cause on campus or stuff like that. So we started a rotation associate program, I think about a year and a half ago, wherein freshman students, students who might just be going into the second semester in college, get a chance to apply to NUimpact. And we have a set number of rotations that they go through every semester. So for example, last semester, they went through a set of 4 rotations. And every month, they switch their rotation and switch their team. So for example, I might be sitting on the fundraising rotation for the first month, and I might be attending all the fundraising meetings with the director of fund development out here, who's James. In the next rotation, I might be working with the analyst team, learning about the investment process. In the third rotation, I might be learning more about our community and development aspect. And in the fourth rotation, I might be doing an executive rotation, learning about succession, interviewing, planning for the future, all that good stuff. So what this really does is it exposes young members to the entire breadth of the organization from the very get-go. And we see this as a leadership building platform. So these younger members typically turn out to be senior leadership within the team, and they can spend 4 or 5 years within NUimpact and answer that question of continuity. So that when we are fundraising, when people ask us, like, how do you make sure you don't lose students once they graduate? We have these students who want to stay with NUimpact for 4 or 5 years, because Northeastern has a co-op model wherein you work for 6 to 12 months. So we do 5 years sometimes. So they stay in for a long period of time. I hope that answers what you were looking for.
Yeah, that's great. Thank you so much.
Most welcome.
Ron, thanks so much for sharing. I think it's a wonderful presentation and congratulations on the deals. I just have a quick question. I think hospitality and also restaurant is kind of one sector, as you mentioned about EatWell. Is any other sectors, since you have 5 be analyzing, which you see like kind of promising and might be something you want to do in the future? Could you share your experience, please? Thank you.
Sure. So I think that's a very viable question. So we have something called the Research Analyst Program, which I'm circling right now. A lot of these research analysts we have 2 more, their photos weren't taken sadly. A lot of them serve as experts in our 5 sectors that we invest across. So the 5 sectors, I hope I don't forget one, is healthcare, community economic development, education and financial services, food and ag, and we have one, energy and environment. So I think whenever during this COVID-19 time, these research group is actively researching making sure that where can we direct our small dollars to make the biggest impact, because that's the main aim at the end of the day. And what we've seen is that all 5 sectors have been pretty deeply affected, but all 5 sectors have opportunities to grow as the world becomes more remote. EdTech becomes super big, and so does financial services. Healthcare is booming right now. EatWell is addressing the problem of food insecurity in food desert areas. And then energy environment, renewable energy is becoming increasingly important. So all sectors are seeing areas of growth, and we think that with COVID-19, we need more people to be putting the dollars in areas like these. And I think this picture might help. So this is where NUimpact fits within the entire Boston venture ecosystem. So the kind of capital we provide is generally pretty small, and till now we've been able to find ventures in all 5 of these sectors that I spoke about earlier. But I think healthcare, which is pretty obvious, is the one that's really taken off. And even education technology, I think will fall to be a close second in the near future. I hope that answers your question.
Yes, indeed. Thanks so much.
Most welcome.